Good evening, everyone. We are here to talk about the fact that until a couple of months ago, it used to be simple, right? Banks used to do banking, forex brokers used to do forex, and crypto platforms used to do also crypto. But now, in the past period, we see that these lines are converging and everyone is going into the other territory. So this is what we are talking about the blurred lines between these two industries. So I have here with me, on my left, I have Lior from XBO, I have Andrew from Talos, I have Demetrios from BitDelta, and I have Steven from Forex Brokers. So Lior, I want to start with you, okay? We want to understand what defines at this point a crypto exchange. What are the differences, the regulatory, the infrastructure?
Okay, so on the very basic level, crypto exchange is a bank for crypto, allowing crypto and fiat to crypto, usually also crypto processing, solution for corporate, solution for retail. XBO, for example, is a crypto exchange for retail and corporate, but most of our volume comes from institutional. We provide a lot of corporate services, crypto processing, crypto as a service, crypto rails. And because we are in the institutional level, we see a lot of attention from the TradFi. So obviously, as a crypto exchange, you have, before MiCA in Europe, there was crypto registration, like VASP.
Yes.
Those were the legal rails and compliance that you need to apply. Globally, you have also Canadian MSB, for example, and other offshore entities. Now, following MiCA, then you have a MiCA license in Europe, which is similar to as a CFD broker. You have different licenses in Europe and globally, legal opinion, not legal opinion. But I have to say that in the last few years, you see that as far as at least licensing and regulation, crypto exchange was much more restricted than CFD broker because it's need to apply something which is more like a bank. And now following MiCA, it's started becoming more
Everything
similar.
Everything is merging.
Yes.
Exactly. How do you see this, Andrew?
Yeah, I think, when you started your answer, what is a crypto platform? It's basically, you listed a number of different services in crypto. And I think that's the key point, and I'm sure we'll discuss this a lot today, that services in crypto, or services that run on digital rails, is now expanding much more. So it used to very much be spot crypto, which meant BTC, ETH, etc. Then the use case evolved into stable coins for cross-border payments. And now we're seeing traditional instruments trade on digital rails a lot more. I'm sure we'll talk a lot today about how oil, gold trades on Hyperliquid and how every other crypto platform is now looking to offer those assets. I think that the core idea is a crypto platform is something that offers crypto services and digital assets. And the next thought is that everything is soon going to be a digital asset, and therefore a crypto platform should be your all-in-one, potentially could be your all-in-one financial sort of platform, let's say, solution. Yeah.
How do you see this, Demetrios?
I'm actually a little bit confused because we started talking about crypto exchange and then we moved towards a crypto platform. Maybe we are going to be talking about crypto PSPs. They're all different things. I mean, traditionally an exchange has different LPs than the exchange itself. Where a broker, the counterparty most likely will be the broker. So this is the definition. Now, of course, things are evolving and we have this new DeFi revolution. And we've seen the likes of Aster, of Hyperliquid, picking up all of this flow from all of this, starting from the professional users, now they're going down to the retail users. I do not know if you guys have seen the new Trust Wallet. Amazing. And it's one of our competitors, of course, as well. But we have to give kudos where kudos needs to be given. I mean, the future is definitely a combination between centralized and decentralized, because humans tend to get it wrong, and when you get it wrong, you still need a human to
You
help.
still need your dose.
So this will be my stance.
Stephen, you're here from the outside. How do you see it reviewing basically everyone?
Well, I think the industry has really come a long way past the point of maturity, and even now fully integrated, where the next sort of part will be adoption in terms of stable coins, and more people will have stable coins in their wallets to access services, whether DeFi or traditional finance. And crypto exchanges have really evolved to be custodians of secrets, right? Because as a bank, you're custodying assets, but as a crypto exchange, these assets, someone hacks in and gets access to them, the money's gone, it's irreversible, right? In most cases. So the point is they operate under these strict rules, and a lot of that plumbing, I think, is coming onto the CFD forex brokerage side and traditional stock brokerage industry. Which is good, because that's really the main benefit. It's not just the crypto assets, but it's the underlying plumbing and technology that I think the CFD industry is going to benefit from. Things like perpetual futures, which is, in my opinion, a better form of a CFD in terms of how it can be plugged into blockchain.
But they were flagged by MiFID in February. They consider them as CFDs. Of course,
Right.
the NCAs haven't done anything yet, but still.
Exactly, and they could replace the traditional CFD in the sense as more brokers adopt blockchain technology and integrate these products, because the consumer maybe doesn't care whether they're trading a product and whether it's a future or a spot or a tokenized stock or the underlying Tesla share. Sometimes they can't even tell the difference. So I feel it's more of a UI UX challenge there. But
I agree. The user just wants a cash settled product to express a view on financial assets. And I think perps are probably the natural evolution of every sort of financial innovation that we've seen into I guess its most efficient form.
Maybe it's a better name than a CFD as well, so it sounds cooler.
Yeah.
That basically leads me to my next question. When a crypto platform starts adding forex instruments, start adding stocks, perps, and so on and so forth, what are they becoming? Are they becoming a supermarket? Are they becoming a super app? How do you see this, Lior?
Okay, so I was just telling before, when we launched XPO 5 years ago, the whole motivation of launching XPO was to have all-in-one crypto exchange. Because I think already 4 or 5 years ago, especially when MiCA started being established, we knew it was going to take time, but we already saw the regulation, we saw the institution coming into the crypto and the stablecoins. We saw it as a vision to have all-in-one crypto, and we were not the first, obviously, to see it. So that was always the vision, because at the end, digital assets are here to stay. Fiat is the most common usage, and at the end, users want to be able to use in one app everything related to trading, finance, fintech, etc. So the natural thing for us was we started with spot, and then we advanced into futures, but then we also had stocks, X-stocks, tokenized stocks, which was amazing even for us. I love to see the fact that I'm a user of my own app, which wasn't always the case. So it allows you to enter space and other amazing stocks like Tesla, whatever Elon Musk is doing, yeah. But and then we added CFDs as well, because if you already want to trade, why don't trade CFDs? And it's very much connected. So as I said correctly, at the end we are on crypto rails. So you come as a crypto exchange, the focus is the crypto. We don't expect you to come deposit fiat and trade with fiat. That's the main difference right now. But we have also XPO e-money, which is an IBAN account where you can deposit fiat and have a fiat card, and in parallel to it we have a crypto card. So it's becoming, yes, a lot, but it's not about the marketplace, it's more about ecosystem. So the user doesn't have to switch between different apps, different username and password, different rails, different...
So you see it as a super app?
I think that everyone are going to this direction, at least from the crypto side, crypto exchanges, or Revolut, that is like a fintech app, but is a super fintech app, but they already started with this motion, but they started with, first they were a bank, and then they added crypto as a CFDs, although they called it crypto, but there was only CFDs there. And only after that they added the custodian solution, and only then they added more coins. And first there was only Bitcoin. So everyone saw it, everyone planned for it, everyone working on it, from the fintech and from the crypto side. The ones that will be able to accomplish it successfully and in a way that will be holistic for the users, they will be successful, and the ones they won't, I think, will be abandoned eventually.
I understand. How do you see this, Demetrios?
I mean, super app is not a common word in the crypto space. We usually talk about ecosystems. So my colleague Leon is very, very correct. And because you have your own chain, you have your own token, you have burning, you have minting, you have all of these things. So in terms of building a provider that gives a lot of services, this is good for what the client wants to see. So as we are evolving, and now the big thing is RWAs, which of course we have seen the new trend to be tokenized stocks, starting from the major US stocks. And we've seen this, there has been a lot of press around the Binance and Alpaca deal that happened a week ago, I believe, or 2 weeks ago in the news. And this is a very big trend. Of course, the number one thing we need to do is to listen to our clients. If the clients want to trade more stocks, then we need to offer them more stocks. If there will be a convergence in the future for retail traders to trade options, and options will become more user-friendly for retail, and having a company similar to Deribit, maybe that will be the approach. Now we have seen also new trends like prediction markets, which is becoming not yet $1 trillion industry, but on the high billion, on the big figures. I think we've seen Kalshi doing really, really amazing in the US. The idea here is not to brand it as a super app or an ecosystem. The idea here is to cater your client. And of course, as it was mentioned, there is this piece of the missing puzzle that is covered by the processors, and the missing part that is covered by the exchange, and the missing part that is covered by the product. So of course, if you can start combining everything and doing this journey as frictionless as possible, is the best for the company, because the numbers will also justify the means.
I think this is a very, very important point, that at the end of the day, we all want to offer whatever our clients demand. Digital assets, the technology unlocks the ability to do any kind of financial product more efficiently than existing rails. That's the fundamental point underlying all of this. So the examples that you brought up of prediction markets, those could have been invented prior to crypto, but the seamless technology allowed these markets to grow and develop. And so we'll continue to see other sort of products and use cases like this that don't obviously look like crypto, but they exist on digital rails. So it's just the fact that crypto platforms have this technology and way of thinking, which gives them the head start versus, I guess, traditional platforms.
So you basically see that the crypto platforms have an advantage because of the blockchain technology.
Yeah, and I think it's more than that. It's the fact that 24/7 risk management has been embedded within their platforms from day one. We service some of the largest tier 1 global asset managers and hedge funds. And when they've looked to add crypto, it can't fit into their into their risk systems because they need a closing price on Friday. They don't know how to mark risk over the weekend. Whereas these concepts are all naturally existed forever for crypto native players.
And then you have AI as well. So this will help solve these missing parts. I mean, something that is really, really important and going towards the AI revolution, you have agentic payments. So you can just open the cloud and say, listen, go build me a website, pay this website with my card, and then it will go directly connect with the Fix API with the likes of Robinhood, and you will put your card, and every time you build, it will pay with your most likely crypto because it's faster. So
it'll invest on behalf. It'll understand your risk appetite. It'll reallocate your funds, without you even, being consciously aware of it. So yeah, you saw Coinbase's announcement.
The advisor, right?
Exactly.
They just had a registered investment advisor that's an AI. So this is interesting because you'll still answer a questionnaire, give the AI context of your background, your portfolio, and then it will make recommendations to you. It kind of reminds me a little bit of a robo-advisor kind of evolution, but to the point of making payments for crypto to buy a service and give your agent like a wallet to spend, that's live with the X402 protocol. Yep. And I definitely think it's the next level of these automated trading systems where you're going to see them have a budget and go out there and subscribe to a service. MCP servers, lots of brokers are launching MCP servers now. We've seen just in the past few weeks more and more. And that's really going to be the API for AI, right, is the MCP server. So there's definitely a lot of room for the brokerages to further differentiate yourself. Back to your question earlier, Alex, on, is it all just going to look like a supermarket? And I think that there's still a lot of room for brokers to have different trading tools. And, in the screeners, the traditional stock screeners are evolving beyond just a watch list, where you can now find opportunities, customize them in different ways. And I think that's a powerful way for people to find, trading opportunities and use AI to generate signals.
That's a very good point. That's a very good point and very valid. But the way I see it, it moves the whole pressure from the retail side, it moves it to the institutional and to the infrastructure side. As all these features coming, MCP servers, AI, agentic, etc., puts a lot of pressure on the infrastructure side because you need an infrastructure to sustain all this. So how do you see this, Andrew? What do you think that the institutional side is still missing today in the crypto world?
That's a good question. So I guess for context, Talos is an infrastructure provider. So our clients are banks, asset managers, retail platforms, and we provide connectivity to crypto exchanges, OTC desks, custodians. So it very much is this use case that you're asking about. Institutions want a single infrastructure solution that gives them everything they need. There's a couple of big missing pieces, and the one is on the institutional side, and it's the point that I made earlier. Really, it's about risk systems. These legacy, particularly banks, particularly big asset managers, have got a milfay of technology, 1,000 different.
We talk about risk management, and we're in a casino. So.
yeah, exactly.
When you start offering so many products, right, your CFDs, crypto, etc., your risk actually increases quite a lot. So on the infrastructure side, how do you hedge that?
Again, it comes down to having robust infrastructure. Obviously, in my role as sales, a common fight is around the price, obviously. And I get shown, but your competitor is doing this at half the price. We know what it costs to build and maintain that. We acutely understand, these systems cost what they cost to support. And during times of crisis, you always pay for what you get.
Agree.
So yeah.
Agree. But from your point of view, do you see that the AI in the future is literally going to build your own custom infrastructure, based, of course, on the existing infrastructure provider?
Yeah, I think that's a sort of multifaceted question.
Everyone has different needs.
Yeah, I think the promise of AI is definitely that. And again, we've had sort of smaller competitors who are building everything on AI, cheaper, easier, faster, whatever, but the proof is in the pudding of what the product actually is, and actually the true cost of AI as well. In the early years of AI, the big companies were absolutely subsidizing the cost of tokens. The true cost of AI is much, much higher, and I think I think it's not as easy as it seems.
Okay, you have a fair point. You have a fair point there. I want to move to you, Stephen, because you have reviewed hundreds and hundreds of brokers, crypto platforms. How do you see it from a reviewer point of view when these companies, they keep adding each other's products? How do you see it? As a trust issue, as a competitive issue?
Well, I think it's interesting because the traders are also evolving, not just the brokers, like demand for trading gold or oil in recent years. Previously, like a Forex trader would be so just focused on some major Forex pairs, but now they're trading other assets. So the trend of multi-asset has been ongoing for, over a decade. But the difference is, years ago, you would trade with a broker, let's say in a futures account, and that was segmented away from like the Forex or CFD side or stock account, and it was all fragmented. So now it's increasingly within the same account, the same platform, the same interface. Maybe you have to click a button and just switch really easily, but it's really more accessible. So, and that's why earlier I mentioned how sometimes the trader might not care if it's a future or if it's a tokenized or if it's a CFD or spot, because they sometimes can't tell the difference, assuming they've agreed to all the terms and conditions and they've opened the account intentionally. But the point is that there's still opportunity to adapt the platform to meet the trader's need. If they're a passive investor, if it's more of like a Revolut style or a saver that wants to just buy and hold, they're going to need different tools versus someone who's more actively trading, looking for research, looking for trading signals, looking for copy trading. So it's all kind of blending a little bit, but there's still, I think, a really big opportunity for brokers to differentiate themselves across these categories. Education is a big category for onboarding. That's blending into the UI, UX experience. Brokers are launching educational grade university education, like university grade education, and making it more interactive. Research is another big thing. Using AI to filter the noise. I think when you're using AI, it's really important to have the right intention as far as what you're trying to achieve. But that's where we're probably going to see more novel solutions, right, and creativity. But as you mentioned, it can be very expensive on the token side, especially these new models. That you got to be really mindful with the token spend, because you don't want to hire a surgeon to fix a paper cut. Some of these models are so strong that you got to give them really hard, complex problems to solve. So I think it's going to be interesting to see how that evolves.
Agree here. Moving a bit deeper, Demetrios, how do you see this? Is this building trust in the market? Is this diluting the market? How do you see this?
I think we're somewhere in the middle, because we're still experimenting with AI and with new products. I mean, we haven't seen all the brokers adapting to AI yet, so only a few of them have chatbots. I do not know if my competitors have chatbots in their platforms. Definitely it's also in our agenda to have a chatbot by the end of the year. I think it allows a lot for innovation, but will it be will be under some kind of regulatory framework? The answer is yes, because the investment advisor will just trade. Maybe it's still governed, but maybe it will be more robust to cover for errors or something like this, because the broker should be liable for the AI who will trade for the client in some form, of course. But what I would like to say is that the new core of all of these operations has to be flexible. And there has been a lot of discussion this year about these multi-journeys. So each client might have a different journey. So to answer the question also about the institutional UI, one UI will not fit everyone. So imagine if the core is flexible and then you just fill the form and then the AI just creates it perfectly. But I mean, the foundation will be still similar for everyone, the data segmentation. But I think the future is, I'm very optimistic for the future, at least for the next 3 to 5 years.
If I could add on that,
Yeah, sure.
I would say that I agree with that, and I think you're going to see more volumes from the agentic trading.
Yeah.
But as Dimitrios said, some brokers are going the more conservative route with their MCP servers, and they're only letting you analyze data, get access to the prices, maybe do analysis, versus trading and placing orders, where there you need more checks and balances to make sure it's placing an order for 10,000 units and not 100,000 units by accident. But I think brokers are approaching that also safely. Some have already enabled that agentic style of trading, like Robinhood or eToro or some others that have enabled trading in their MCP servers. But there's definitely a rebirth of all these algo trading systems that used to be popular, like on MetaTrader and EAs. It feels like it's coming back. But I think retail traders can be misled, and there's a lot of unbalanced, claims on social media by these AI algos that people think they could get rich with, but usually, they're going to lose their money really quickly. So I think the trust factor is important there, and the regulated brokers need to be really mindful of how they're, advertising and promoting these things, including third parties, because there's a lot of hype in the market, as you know, with the AI-driven trading systems, even though I think they're amazing and there's a lot of opportunity there.
There is a lot of opportunity, and speaking on the base of trust, there is a lot of criticism in the market at this point that all these new products and everyone adding new products to their ecosystem is just a regulatory arbitrage at the end of the day, because you have Hyperliquid, which is the best example, which is a bit unfair, especially with the perps, as the NCAs didn't classify them yet. Only MiFID did that. But how do you say this, Demetrios?
I mean, arbitrage is a very, very bad word, especially when you're talking to regulators and this gap in regulatory frameworks and all of these things. There is, being in the crypto sphere for a while now, there is a lot of people that believe that decentralized finance is the future. And maybe for some of the part, they are right. But again, if you're trading very big size with this kind of decentralized platforms, and you do a mistake, it might be very devastating, and it comes back to risk management. And we've seen cases where they were slipped 95%, and they lost millions and millions of dollars, and they do not know who is the LP, they do not know who they can raise complaint. They are not regulated as well because they are decentralized. I mean, in the UAE nowadays, there is a new framework about regulation, about decentralization, which is very nice of what they're trying to do. But definitely, this kind of innovation will allow them to scale. But the regulation will come in a way or in a form. It will come.
That's for sure. Regulation for sure. They're going to catch up.
Yes.
Eventually. How do you see this, Lior?
I will add on the previous question, which is connected to your question right now about the infrastructure, which is also connected about whether it's too much and the target audience and the focus. And I agree with all my colleagues. I can say from our experience in XPO that we are also a crypto exchange and also a CFD brokers. I can say that, as Andrew said, the set of mind in the crypto at the end, who started crypto exchanges? From the fintech industry. No one was born into crypto, right? So, and also our team, right, at the end came from the broker tech and fintech and algo trading also. So we already have this experience. We came into the crypto space and learned something new and had the evolution, and embracing back into the fintech using the digital asset rails and the crypto rails is easy and natural. And that's why you see a lot of expanding from the crypto into the fiat and the more traditional fintech, because the team's already experienced. And as Andrew said, we already have the capabilities. So we already started in the hardest point. But still the focus is crypto. And our bread and butter and our target audience is the crypto users, whether it's institutional or retail. The CFDs brokers and the TradFi, their bread and butter is the traders. And they know their target audience the best. So I can add, as a crypto exchange CFDs, I will never be like, I don't know, any big forex broker. Don't want to say name, not to say other, you know?
Okay.
So it will be different, but I can say that on the infrastructure level, we, for example, develop everything in-house. Why? Because we had it, but SAMS has other focus, and they need this external solution, and they're probably going to continue to do it. And especially when we're talking about the brokers, the forex brokers, I see that there's a lot of work to them.
Everyone is gonna catch up at some point.
Yeah, so the focus
for everyone.
The focus will probably be on innovation and not on replacing something.
Could I comment quickly
Sure.
on this? And I know, Andrew, you might have views on Hyperliquid. I view DeFi as an extension of like the interbank market, where you can go to a decentralized exchange to access liquidity as a broker or an individual. So I don't think it's going to replace traditional finance, but rather be another venue that you can access. And I mean, I used Uniswap back in 2017 when the SEC said, oh, you have to delist these tokens. And they're like, well, we can't because it's a smart contract. Anyone could create a market. So they removed it from the front end. So you might see regulation affect the front end of a website like Hyperliquid's website, but you can't regulate the smart contract because anybody could interact with it. It's deployed. And I think that's really the fascinating thing. Although it's adversarial, you can't call customer service, if your trade gets, rejected or whatever, but anybody can access it, and that's the magic of it. That's why Hyperliquid's BTC order book recently was like higher than Binance's a couple of days ago, which is, you could no longer ignore them. But I think it's a different kind of threat, right? It's like they're going to be another venue, so I wouldn't be surprised if large brokers use Hyperliquid to access liquidity like an LP and use it as an alternative venue. They do, right? Yeah, exactly. Right, and they might even buy up the token and get a discount and pass that to clients. So it's interesting to see how this will evolve.
As a last remark from each of you, and you should go into one sentence because we are running out of time here. How do you see this after 3 years? We are still going to be on the same stage discussing this ongoing war, let's call it like that, between the crypto brokers and the forex brokers and DeFi and so on. How do you see it, Lior?
Wow. Good question. I think that there's too many, right now, 3 years from now, I really don't know. The AI is, at least for us, was very,
Let's be open. Everyone is recruiting
big.
from everyone. Everyone is.
Yeah. So there's a lot of changes, regulation-wise. MiCA just started, and it's going to make a lot of changes in the market. I see a lot of, as you said, there's a lot of different spaces merging into one another. And with AI, that I think that, as difficult as it is and has its challenges, I always say to the guys, it's very hard, but if you're not on the train, you are getting left behind. So we need to be there. And there's a lot of challenges. It's going to be a very challenging period for a lot of businesses. And I think great thing will happen 3 years from now, but I really don't know how it will drop.
Yeah, we're out of time, Andrew.
Yeah.
I think 3 years is a long time, but it's also a short time. The firms that are coming in now with the tools that they have, I think we'll see a lot. I think we'll be a lot further down the path than we think today.
Demetrios?
I would like to think that we will still be here, all the four of us, or a younger version of myself. So hopefully. But yes, teams will become more efficient, teams will become smaller, and things will get done much, much faster.
I think, I hope that there'll be more risk management tools for traders to improve their outcomes that will help build more trust in the industry for the more complex derivative kind of products, whether it's a prediction market or an event contract or a CFD or a perp. I think, margin trading is very risky, but if we can give traders better tools that can help them, build sustainable long-term trading and risk management, I think that's going to be great for everyone. So I hope to see more of that.
Okay. I want to thank you, all of you, for your insights. We have some questions answered over here for our audience and also for our online audience on YouTube. And everyone, please thank you to our guests over here and enjoy the rest of the conference.